Okay, so we have a new episode of Legends and Leaders, and today it's great to have Elle here. Here's somebody that's been really responsible for the growth of inKind. And inKind is, for those that don't know, it's a dual-sided marketplace that gives access to capital to restaurants, and then kind of has a reward side to this, where you can offer these rewards and people can claim them. And you've really helped the people out that are eating in various different restaurants to kind of get take advantage of the rewards that are possible there, and to build this ecosystem around that for also restaurant owners. And it's this really nice ecosystem that's really benefited that entire space. And this doesn't just extend, isn't just restaurants. It's also bars, it's venues. It's a really multifaceted system. So I'm excited to have you here and to get into your story.
Thanks for having me. I appreciate the time and excited to tell you about the inKind story.
Awesome. So how did your interest in business leadership and specifically in this space of investments in restaurants, how did this passion of yours begin?
Well, it started a long time ago. I came to this country in 1995, and as a new immigrant, the first job you get is a restaurant job. And I was making sandwiches at a mall in Dayton, Ohio, and while I was going to school. And after going to school, I did a couple of jobs, but I ended up in the consumer packaged goods business, selling to restaurants and hospitals and institutions and things of that nature. And I've been doing that for the last 25 years or so. So I fell in love with the independent operators that are trying to build a business from scratch, and understood the struggle that they go through to make a living, and how hard it is to, operate these restaurants. And the diversity of, the restaurant industry, the number of people they employ, it's a stepping stone for so many kids, or so many people, and also an entryway for a lot of immigrants. So I love this industry, and I love food, love restaurants, and yeah.
So what made you interested in the capital side of things? I mean, you could love the food, you could love restaurants, but investing in them seems to be kind of different.
Yeah, so that one was an accident. I ran into the co-founders of inKind that are my neighbors. Met them about 5.5 years ago. I helped them while they're scaling up this business from the outside, and then along the way, really fell in love with what they were doing, and understood, how revolutionary it is. And I quit my cushy, job managing the largest cheese company in the United States to join them. And at that time, there was a small team, small business, and my goal, my what I was brought in to do is to scale up the business. And 3 years later, it's amazing the journey that we went through.
Mhm. Was it hard for you to leave that role previously and jump on something that was maybe less proven?
Uh, yes and no. Financially, yes. Cash wise. But it was a juncture in my life, and after COVID, and hadn't traveled for a long time, and every week I was on the road, and I have two daughters that are getting to high school, and as you know, COVID had a lot of people rethink, what's next for them. It was the right time for me, and it's been an amazing journey. I learned a ton, and met some great people along the way, and it's been an amazing experience.
Mhm. So what was it like right when you were at inKind? What were the biggest problems that you had to solve right when you got on board? And how did you fix these problems and help set the company on a growth track?
So the model worked. It was tested in many places, especially after when COVID came, started to go up. The issue with it was not scalable at a
Mhm.
fast pace. So we had to change the way we fund restaurants
Mhm.
and how we fund them and the way we engage with them. There were a lot of friction points. And then the second thing that's on one side of our platform, the other side, we were doing something called house accounts, and those were bespoke, credits sold at each venue,
Mhm.
and that wasn't going to be scalable, and that's why we had to introduce a new product that we did about 2 years ago. Took us some time to get the technology to work, get the accounting, finance, and investors to think it through. And then once we launch it, and just both things just took off.
Mhm. And once you did get involved, I mean, where was the rewards piece of this at? Because there was the capital investments being done, but it seems like rewards has really picked up a lot more. Was that something that was a big priority then, or did you really have to push that program into fruition?
Yeah, so we started as house accounts. So for example, you can go to a Union Square hospitality restaurant, and if you buy $1,000, we give you $1,250 worth of credit, and you can purchase that. So that's the bonus aspect, but you could only spend it at a Union Square hospitality restaurant. You can't take it elsewhere. Once we introduced the inKind cash, we started giving bonuses as a percentage. Anywhere you purchase, you get 20% bonus. Okay, and that allow us to get those rewards to be ubiquitous. It's a cash that could be spent anywhere inKind accepted, and that helped with our repeat visit. Our customers start coming back more, they start buying more, and start going out to our restaurant partners a little more. So today, if you open our app, any purchase you make, we deposit 20%. So if you go into a restaurant, spend $1,000, we put $200 in your wallet that you can spend anywhere.
Why the 20% number specifically?
We debated that quite a bit. Good question. So we started by thinking 10. 10 we
Mhm.
thought wasn't aggressive enough. 15
Yeah.
would have been amazing, but 15 just doesn't sound right. So we went up with 20%. The human mind, the human psyche likes simple, round numbers.
Mhm.
And that's how we came up with that 20%. It works well with our economics. So yeah, believe it or not, we debated that for probably 3 to 4 hours.
Yeah, well, I definitely makes sense. I mean, I think you're right about the number 20 being a big difference than 10, and the way it
Yeah,
resonates more than 15. 15, you probably have to do a calculation every time you order something.
correct,
20, yeah.
correct. And you don't want the guest to think, or the user to think about, doing any math or anything. Simplicity is what we try to do. We simplify things as much as possible so that users don't have to, work hard at thinking about, they should come, enjoy the experience, enjoy the great food, the great service, at these great restaurants that are curated, and not think about how much, they're going to get back, etc.
Mhm. How does your business model work? I know you touched on this a little bit earlier, but you guys have invested like I think a fuse over 300 million of capital in all different types of restaurants. You're collaborating with thousands of restaurants all around the country, and then but you're also giving these rewards at the same time. How does the whole model work?
Yeah, so we call it the triple win. So where the restaurant wins, where
Hmm.
the user or the guest wins, and where inKind wins. And the way it works is start with funding restaurants. So for every dollar we give, we get $2 in credit back. And that's basically a promissory note that inKind can send users to redeem up to that amount. So if we give you $1 million, then if you have a restaurant, we give you $1 million, you give us $2 million in food and beverage credits, okay? And it becomes basically what we call our inventory. We will only send users to redeem up to that $2 million, and then we stop unless you re-up with us. So we take that inventory of credit
Hmm.
and we sell it to users on our app, and we have about 2.5 million users now. Our numbers keep increasing every month. We have 2.5 million users as of today that we sell these credit to, and we give them bonuses, and that's why we're able to afford the 20% bonus that we give them back when they come and dine at these restaurants. We don't do any discounts, so we look for people that wanting to come to these restaurants more often. So it works as a loyalty. So the user gets a lower cost meal. The
Mhm.
restaurant gets capital, and that's a lower cost of capital financing because they're reimbursing us over time, over a 2-year time frame, with their cost of goods, which are usually somewhere around, you know, $30 or so,
Mhm.
30% or so. And, obviously we make money along the way. So everybody win. That's the creative, magical thing about, our model.
Mm. I mean, it's interesting that you guys have chose to focus on restaurants, Al, because I mean, we just came out of COVID, which wasn't such a simple time for the restaurant space. Sometimes it's not so reliable. The revenue stream that they have, it can fluctuate. It could be even considered more of a riskier type of area. Have you guys figured out kind of a way to invest in just different areas that hedges your bets really nicely on these restaurants that you're partnering with?
Yeah, so we created an underwriting. That's the genius about this. Not only we invented this model, our founders did, and we kept refining it. Um, our underwriting process is very, very unique. Obviously, we look at the financials, the growth, but also we look at the reviews,
Mhm.
we look at the ratings, look at the concept themselves, where they're located. So we do things that are very, very unique to underwrite these places. Um, and we test things with them. So we give them a small amount, 5 grand. If it's a counter service restaurant, if it's a sit down, $10,000 per location, we just start there for simplicity, and then we see how our users are interacting with those restaurants, and we fund them more. Our default rate is very, very low, just because we only fund, cool restaurants that have great reviews, that have, great ratings, and that have, solid, cash flow, and that are successful chefs and things of that nature.
Mhm.
So yeah, so we're selective in the way we underwrite. And I think by default we have less, of a risk, and we're able to prove that, certainly in the last 5 years.
Have you found that there are restaurant owners that would not take in money elsewhere, but are open to doing it because of the way you support them with the rewards and was just helping to drive traffic? You have a couple million people on your app. Is that something that they really become more enticed to take the capital from you and partner with you guys because?
Absolutely, we have many of those. So a lot of people come to us for many reasons. Some is capital. I have a client that came in, took $5 million from us. All they wanted to do is pay down the loan with the bank because they had so many restrictions and so many covenants. So they
Okay.
didn't need, technically, they didn't need the cash. They just wanted to replace
Yeah.
us, with their existing lender. We have Danny Meyer, Shake Shack, he sold Shake Shack. Danny Meyer probably has more money than that. Certainly, he doesn't need our money, to just say.
Mhm.
And he's on our platform, one of the most successful restaurateurs, certainly in New York, not in the country.
Mhm.
Um, he's on our platform because they just love being part of, our loyalty, program. But we have others that are expanding and growing, that use our money to fuel, growth. So they come on our platform, we fund an opening of a new location, and when they open that one and get it going, we fund them for, another location.
Mhm.
And that's the great thing about our model. It works well, works like a revolver. We keep, funding you as you grow, and as your base of sales grows, we're able to fund you. We do not, candidly, we try not to fund those that are really in need and cash crunch,
Mhm.
unless we know that they have a business turnaround that we believe in and that's going to work, because that's a risky situation for us, obviously.
Mhm. Yeah, I mean that's great. You've got a partnership with Danny Meyer. That's a big deal. How did that happen? Was there some way that kind of came about that was interesting?
He was an early adapter of inKind. We're so thankful for his support. He came, our founder met with him, explained to him the model. He became very intrigued, by it. He brought his team, had his CFO crunch the numbers, and she told us back then is, okay, I'd rather put my money in the stock market and take yours because it's cheaper that way.
Mhm.
And then, Danny says, no, we don't need to do that. It's all about, the guest and how you guys could send us, yeah, younger, more technology savvy guests, etc. So we've been with them ever since.
Mhm. Yeah, that's great that they did it. I mean, that's a big partnership. They have restaurants like pretty much everywhere. That's
Yeah.
awesome. Yeah. Do you guys also see yourselves financing restaurants and starting them yourself, separate from just investing in others? Because I'm sure at this point you have so much data on what works, what doesn't work, the best locations to put restaurants in. You probably know a ton more than maybe an individual operator would have. Is that something that you guys have thought about, doing?
Yes, and actually, we own now six restaurants, I believe. We have the highest grossing restaurant in Austin, Texas, called the Guest House.
Mm,
When you're here, make sure you come visit us. Um, so yeah, so we started small about 2.5 years ago, and the idea was just to open one restaurant, Amber Kitchen, and so that we can test everything, that we do. So any new technology, any new product that we come out with, we test it on our restaurant first, and we still do that to this day. We send our new associates to the restaurant so that they can understand, how restaurant work, and hopefully they develop some empathy to the restaurant industry because it's hard. It's hard business. And then that escalated. A lease became open. We opened the guest house, and then we bought a company out of bankruptcy, and then opened, three other restaurants that we converted into vibe dining. Restaurant is what we try to do. This is great food. It's like the crossbreed between restaurants and nightlife, and so successful six restaurant. I don't know where it goes from here. It's a lot of work though. So we're in the technology space, so this is just a side gig, so to speak.
yeah, it's quite a different side gig to have, and probably a pretty intense one. I mean, tech is you've got this whole platform. You're like an Airbnb, Uber type situation. You don't even own the restaurants. Generally, they do all the work. And you just have to drive traffic,
Yeah,
um,
yeah.
which
Our
is
co-founders are restaurants at heart. They started as restaurateurs actually before they started inKind. They love restaurants, and so um, this is one of the things that they're very passionate about and very proud of. And actually, one of our co-founders, I think he's in Vegas today at our location in Vegas.
So, I mean, we've seen like so many different types of reward systems out that over the years. I mean, one that everyone talks about, of course, is Amex and what they've
Yeah.
done with their lounges, and you pay this kind of membership. I mean, do you see yourself emulating some of the things that they've done? I mean, they have such a high retention of people. Like maybe introducing custom, like unique VIP type areas in some of these restaurants, or other types of perks that maybe you've thought about would be good to add in. Is that something that like you're going to kind of emulate their model at all?
Yeah, so we see ourselves as a platform where people, when they wake up in the morning, they do all of their, dining, their entertainment, and, who knows, their travel and hotels and whatnot on it. We're starting small with just the restaurant industry. So we want to master that first. Within the restaurant industry, there are perks around, tables and, you know, VIP treatment and things of that nature that we're going to be launching, in the future. Um, but we want to do that in a way that, that it's scalable, and that it's a good user experience. But yeah, so we're just scratching the surface in terms of, what are we going to do? We don't want to compete with Amex. Obviously, Amex does what Amex does. We want to stay in that hospitality, space and entertainment space.
Yeah, that definitely makes sense. I mean, I see restaurants have done well, so around that area, it's good
Yeah.
to get into. I mean, you also are partnered with bars and cafes. How different does a partnership look like with a bar or a cafe compared to a restaurant? I mean, do you allocate similar kind of check sizes to these types of of places too? Are they, because it could probably take longer for the bar or I mean, specifically for like cafe, it could probably take a lot longer for a cafe to pay back or to even get to a certain point than a restaurant specifically.
Yeah, it all depends on the size of the business. So our funding, is relative to, the size of the business. So the beauty about it actually for bars and for cafes, our model work really well because the cost of goods are low relative to, sit down restaurants. Um, but yeah, so the size of check depends. So we like to be between, you know, 2 to 5% of your annual sales, because we don't want to be a cash drain on the restaurant slash bar, or you know we have nightclubs, on the platform as well. So we try to stay within that band. Obviously, there's an art, um, and also depend on how strong of a cash flow and balance sheet they have. Sometimes we stretch it a little more, so that because they can sustain it. Restaurant sustainability is very important to us,
Hmm.
and we do that, in a variety of ways. Make sure that we don't overfund them, number one, and second is that they have a sustainable model that they could be here, because we're in this thing for 2 years, on average.
Do you view this at all like private equity, where you just kind of go in, you buy an asset, you wait a couple years, and invest in it, and then try to flip it in the end? Or is this like, we're investing in you, we want to be long-term partners, we're building you into our ecosystem, and we're just going to keep using profits from that to go and buy new or make new investments?
Yeah, the good thing about inKind model is it's non-dilutive model. So we don't actually technically take equity in the business.
Mm-hmm.
So once, we deplete the credits inventory that, we have taken into the restaurants, you know, we can shake hands and we move on and you move on as a restaurateur. It's non-restrictive either. So yeah, we like to know what you're going to spend the money on, but you can spend it on literally anything. Pay down debt, like I said earlier. You can, you're going to have an exit for some of your partners. There are a variety of ways that you can capitalize your business with in-kind money. And then, last thing is it's non-intrusive. We're not asking you for, we don't have all these covenants on you and what you do, with your business. Want it to be, a seamless, a touchless, process for you. And it's important to us that, the owners of these businesses, when it's all said and done, that they actually own this piece of of their equity, and that they cash out hopefully handsomely down the road.
Mhm. So you sound like the perfect partner. You don't take any equity. You're helping and driving traffic, and you're giving them
Yeah,
jobs right then.
yeah, that's the triple win.
Oh, what's your big picture vision for the company here? Where do you see this going in the next 5 to 10 years? What does that look like?
For us is, to have hopefully tens of millions of users on a platform, that they are loving, the product that we're launching, that, most of them spend, most of their entertainment, dining journey on, on inKind, and that they're giving us good reviews.
Sounds good. Well, that was all the questions that I had. I appreciate taking the time and doing this. I think it's great that the restaurant industry has a company like you guys where you're ready to help out a lot of these founders and businesses and become a really friendly partner to them and helping them grow. And I'm excited to see how you're going to take that into a lot of different other areas and expand this. So, wishing much success and thanks for coming on.
Thanks, Ben.